Hey, good afternoon, everybody. Tom Stewart here. I am with Matt Ricketts, and this is Smart Business Moves.
Eh,
Matt, how are you today?
Good. Just watching the stock market go crazy from Friday to today. I don't know if anyone else watches that, but it's been a wild ride out there.
It has, everybody thinks that, the Bullard came out for one of the Fed chairs, not the chair, but one of the Fed governors came out Friday and said some things that made it sound like interest rates were going to go up and the market tanked. And everybody's convinced themselves that it was just static and interest rates are going to be low forever and the Fed's going to be buying securities forever. And I, I'm not so sure that the
Well,
market went.
some of it's not good for the market for them to keep buying all these housing, these housing security bonds that are like
Mortgage-backed securities, they're buying them like $40 billion a month.
yeah, that's artificially creating this market. Other thing really that I have noticed though is lumber prices are coming back down to earth. So you look at lumber futures; they're kind of back to not pre-pandemic levels, but not in the stratosphere. So supply and demand works itself out. So these fears of inflation are real, but it's going to be tempered by.
Here's the other part of that, though. All commodities are falling pretty hard, but a lot of that's tied to the dollar because the dollar has gone up. So
It's
I
weird.
don't
The
know.
dollar has gone up in regards to our buying power, and commodities are declining. So,
And those are directly correlated. One causes the other.
but what I'm wondering though is, so everyone's worried that inflation's, usually the other thing happens is the buying power of the dollar goes down in an inflationary environment. So I don't know the answer to that. That's a strange. When everyone's worried about inflation or hyperinflation, the opposite should be typically happening. So we're not economists. We don't have to think too hard on these issues.
No, but it's fun. It's fun chatting about stuff that we
Yeah.
know just enough to be dangerous.
Yeah. But as far as how does that help our businesses, I'm seeing really great trends in my business. I netted 3 new hires at the start of this week. So my available labor hours this week went up about 25 hours per week, roughly, of new hours that I can sell, and of cleaning hours, and that's a big improvement. I don't know if you're seeing any numbers like that in your business. Extra availability that you can sell, anything like that.
We are starting to build our workforce back up to the point where I can say that we really aren't supply constrained at this point. We have the opportunity to add new business, which is something that we couldn't have said a month ago.
Yeah, I mean, some policies that I'm having, that I put in place during, the last few months to kind of constrain demand have been not well received by my customers. Some of my monthlies don't like the fact that we're charging a skip charge for monthlies if they skip a cleaning. Even if we explain to them that it adds 20 minutes extra to their cleaning next time, $20 is just, the way that we're kind of justifying the extra time that it takes. That's not been wildly popular, I can tell you that. Fees and those sort of things haven't, but they've put a lot more revenue in our pocket that and has, we're trying to change some behavior from our customer point of view, is getting them to understand that if they want better outcomes for their cleaning, that consistency matters on their end too, and keeping their schedules. So we're actually reducing our skip rates, even though we've had some pushback from that. That's helping, not having to sell so much because our skip rates are coming down a little bit. We were almost at like 14.8%. Do you track that number, your skip rate percentage?
Oh, absolutely.
Yeah.
I mean, it's in the software.
Yeah, it is. And so if you aren't tracking your skip rate, you really need to find out like how many percentage of your jobs and how much revenue that is. Prior to COVID, mine was around like 6 or 7%. And I thought that was awful. I was like, how do I get this down to like 2 or 3? I wanted to get skip rate down. Now I would kill to have a 5 or 6 or 7% skip rate. I would be dancing in the streets if I could get back down to that level. I don't know do you know where you were before all this?
We were traditionally, like over the years, our skip rate's been a little bit high, about 11%.
Okay. So, I hear people say that 10%, 11%. So we had really worked hard on ours and got it down to 7%. And part of that was prior to COVID, we had these skip fees and things like that the software automatically does. So it's, it's definitely all relative, but I would like to get mine back down to lower than 10%. So we're working that direction. That's important. Sales are going well. Are you, I guess Tom's off for a moment. It's just me. So I'll tell you, sales are going in a good direction. Seeing a lot more leads come in and starting to have the people to sell them to, like having the employees to sell them to. So that's been a good trend. We can talk a little bit about sales today. We've been talking a lot about marketing, but the topic for the month is sales and marketing. And I'm like, I'm definitely into the sales data, that journey of a customer and from the point they become a lead till you quote them, till you turn them into a customer. How does that journey work and how are you tracking it?
And there's a lot of times when you don't have enough business, you don't have enough homes to clean, you don't have enough work to keep, your available workforce busy. And I think for a lot of us, and I've seen this in the coaching we do, the first assumption is we need to be doing a better job of advertising. We need to be marketing more. We need to be spending more money to fix that problem. And sometimes that's true, but more times than not, I've found that it's the sales process is really where the opportunity is being missed. You don't need more leads. You need to answer your phone and do something with the leads that you have.
Yeah. We have such a dominant marketing position in my marketplace. I'm probably could be argued to be overspending because I want to be found first. I want to, capture all the leads, at least get them to my website, be able to market to them on Facebook and show them a pixel, an ad based on their activity on my website. I want to be able to do all those things, but you're right. Like if you don't have a follow-up process for a lead, if you contact them one time and you call it good, chances are that's a waste of money. I can tell you personally, I'll tell you a story, Tom. I have a relationship with a local dealer where we buy a lot of our Toyotas from. So we have fleet still, even through COVID, I saw a lot, but I had a relationship with another company called Ewald. They're great. They're out of Wisconsin though. And this local guy just kept calling me and he's like, Matt, I want your business. And he must've called me 40 or 50 times. And I didn't call him back. He emailed. And, most people would find that annoying. I found it endearing. I just wanted to see how many times this guy would call me before he gave up. And he never did. Once a month, without fail, he called me. So after a couple months of this, I was like, I called the guy back, and his nickname is Bones. He used to be a pro baseball player for the Cardinals. So I was like, look, man, it was kind of a game to me to see how long you would reach out. And you've shown me that you are committed. So I can appreciate that. Like I want to find out a way to do business with you. Now I'm a weirdo. I kind of was just kind of tracking it. You probably aren't endeared by salespeople calling you like that. But for me, I was like, this guy wants my business. Like he wants to do business with me. I was impressed. I don't know if you ever had that experience. Most of the time we're like, God will stop calling me.
But, right. But so you eventually returned his call. At that point, was he able to earn your business?
I've leased 6 vehicles from him since then. So yeah, we're doing business and bought my personal car from him. And I don't haggle with him. He always gives me look, he's like, this is the price that I'm going to give you. You might be able to find 1 or 2% if you were to go beat on the door from somebody else. This is a fair price. This is the way we do it. I'm not trying to beat you up on it. And it's true. There's really nothing left. There would be nothing left for me to go around trying to save $1 here versus just giving him the business. I'd gladly pay him an extra $200 if it went directly into his pocket for just the haggle-free experience of the way he does business with me. So yeah, man, I recommend this Lou Fuse Toyota out of St. Louis. If I have any St. Louis listeners on, the guy's nickname is Bones. Everyone there will know him, and he's fantastic. So
how do we find Bones?
Just go to loufuse.com and go to look at their Toyota dealership. But my point is though, he got my business because he didn't give up and he had some sort of process that reminded him to call me a certain number of times. And there may have been a point that the software stopped, but this guy, I think he went above and beyond what the software told him to do. I think he just was like, I see a guy that owns 16 cars. How do I get this guy's business? Because he's going to buy a car, 3 to 4 cars a year. I mean, I'm not a huge buyer of cars, but 3 to 4 cars a year. He's smart enough to know that like the average person buys a car once every 4 years, every 5 years. I don't know what the number is. I'm just guessing. And maybe it's a little more than that nowadays because of leases and things like that. But he recognized I can eat 4 or 5 times a year off this guy if he keeps growing, you know?
One thing that we forgot to mention when we started today was something is different today on Smart Business Moves, but I can't quite put my finger on it.
Somebody's missing.
Yeah, something is just. Oh, it's Liz. Liz isn't here today.
Yeah.
Is anybody here, Miss Liz? Where's Liz?
I don't know how to do the comments. So without Liz here, we're out of luck, right? So
Nobody knows where Liz is.
Yeah.
We know where Liz is. Liz is in Las Vegas, goofing off.
Probably that's where all our audience is. They're all watching Liz live right now doing the.
It's true. They might be watching us. Liz is in Las Vegas with a bunch of cleaning business owners. She's with her mastermind group. Oh, that's probably not confident. You think it's confident? No, that's not confident.
No, I don't think so. I think people know they're going to be on the show for a minute on Wednesday, and a lot of those folks are. So Liz has a great mastermind group. I would say, I would say it's a level up, like for most people, the kind of people that you're working with, the thinking that goes on in that group. She's adding value to people's businesses, so it's good stuff.
Absolutely is. It's accountability. We can talk about, you can know a lot of stuff and read a lot of books and kind of figure stuff out, but it's the action that makes the difference. It's doing something with it. Oh, here's Robin. So Robin, you're not in Las Vegas, I take it?
Yeah, the accountability piece is tough though, because I think that's why a lot of us wanted to start our own businesses, and like we're a CEO of our own business and we get to do whatever we want, and that's good. And then it's bad, right? Because nobody's holding us accountable for our decisions and like doing the things we said we were going to do. So I find a lot of value in that. In fact, that's why I really like working with you on Made Central. And then, we actually have, we have an accountability system between each other. And like, I have goals that I share with you. It's weird because I haven't had to do that in a long time, but it's definitely pushing me forward to like, be the best version of myself that I can be. So as much as I like to run the show, it's kind of interesting to be, in a team role again and having goals that we're all sharing and working towards. So it's, instead of being a black box and, every decision you make is just whatever you decide today, we're documenting it, processing it, and putting it through filters of like, how does this make everybody better? And that's what these mastermind groups are really all about. So
when you're in an environment where at least one other person is pushing you, you're going to do better. I don't care if it's, a trainer from a, exercise standpoint or business coach standpoint or any facet of your life. If you got somebody pushing you, you're going to do more than what you would on your own.
Yeah. In fact, I need that right now. So I had a coach when I was doing Ironman, and I signed up for doing the New York Marathon through this Cordelemia Research Foundation, which I'm involved in. I got it's really hard to get a New York spot to qualify for it. I couldn't qualify for it in my entire life. It's like a 3-hour marathon or something like that. Like I couldn't get a qualifying spot, but I can raise money for a charity. And so I'm doing a charity spot this year, and that's going to be in November. And so I got to start training. So I'm going to go back to having a coach again, because that really helped me when I was doing the Ironman training of just being like, it's software based, and the coach mostly interacts with you through the software, but it's like, job goes green, he can see what you did. And, the only person that it really matters to is you in the end. But it's funny how having somebody else looking at what you're doing does change your behavior a little bit. It's very funny.
No. So when it's cold or it's raining or you want to sleep in, you can't get away with it because there's somebody going to call you out on it.
Yeah. 5 a.m. I got a new watch for Father's Day. It's a new training tool, and I need to set the alarms for 5 a.m. again and start running again. I've been hitting the pool, but I hate running, and I don't know why I signed up for a marathon. But it's good. It's good for the charity. It's really a cool experience to do. But I really like the least favorite part of doing an Ironman was doing the running. Like, I'm a really solid bicyclist. I grew up with some swimming background. I'm a really pretty strong swimmer. Front third of the pack in both of those sports, and then a back third of the pack in the running part of things. So it's I'm not that necessarily looking forward to the action of doing the New York Marathon. It's the experience of being part of this community, raising money and doing it. So but the coaching part of it, the accountability, I totally agree. Everyone should consider having a peer group. That's kind of what we're doing at Made Central, is creating this academy where we're building a lot of that out. I think that's going to be an exciting thing that we're doing. We're having a user event in October. If you're not on the platform, this is really a cool thing we're going to do. Is I don't have it all planned out and mapped out, but I want to match users up and create some accountability groups while we're there. And if you're a user on the software and you're watching today, help me figure out who we should pair people up with and create some accountability groups. I think that's going to be a really cool thing that people can walk away from the conference and have a peer group that they work with. Because me and Tom, and we have a couple other people that we mastermind with, and it's incredibly helpful in our businesses. It got us through COVID, created some sanity.
Yeah, and there's so much in our day that you can't fully execute on everything that you want to execute. So you have to pick your battles to begin with. And we talk about technology and what a big competitive advantage technology is. But a lot of times we invest in technology and we don't fully use it. Sometimes we don't use it at all. And, part of the accountability from a Made Central perspective would be, tracking how we're using the platform that we have available to us and executing from within the platform, because there's a virtuous circle there. If you use the tools that you have to the extent that, fully utilize them, you're buying yourself time. You're creating the opportunity to execute on more things on a larger scale. It's just getting a habit.
That's a good point. And there's so much data that we could help people utilize the software better on. That's a great point. Are you using this? Are you using your scorecards? Are you using this feature? Are you using that feature? Because there's stuff in the software that I would guess that maybe only 10 or 20% of the users are using. And maybe we should look at a couple of those things today. So one of them might be campaigns. I can share my screen here in a second and figure out where I can do that. So, so from the point of view of, the sales process, we're talking about follow-up and things like that. We have, a lot of automated processes in our software that allow you to create, tickets and follow-ups. We got a few people that we need to still follow up with, but, some of this is they've replied to a text, there's a ticket open, second attempt we need to call. But there's two levels of automations within Made Central. One of them is just really simple, of how many times are you going to contact this person, right? So if you don't want to set up campaigns in Made Central, you decide that you're going to contact every lead. If you're Bones, you decide you're going to contact them 50 times. Or if you're a normal salesperson, I think 8 to 9 is a reasonable number. And that sounds like a lot, but that's not all phone calls. Some of that might be you're going to just shoot them a text and say, hey, are you still looking for a person to clean your house? Some of it might be an email. If you have automations, it could be many more contacts than this, because you don't have to do it. But right off the bat, if you don't want to set up automations within Made Central, you don't want to build the campaigns out, things like that, you could just say, I want to contact every person 10 times. How long is it going to be between contacts, and when does this drop off? And then, so the difference in these two lines would be someone that's a lead that you've never contacted, and then someone that's a quote that needs follow-up and to close that sales loop. That's the simplest thing that you could do. within Made Central or with any sales process, if you don't at least define how many times you're going to contact every lead, if you don't have that defined today, write it down. How many times are you going to contact every lead? How many times are you going to follow up on every quote? I think everyone that's on the show should decide that right now if you don't have a number. Do you think so, Tom? Like, just that's
Absolutely. You know, there was a time, and I don't hear this as much, but there was a time when, people would answer their telephone, and like if you just answered your phone, it was a competitive advantage. Now, more and more of the leads and actual quotes and even booking jobs is all online now. Every, I don't know, month, but certainly you look at this like on a quarterly basis, it looks like more and more work is starting to shift, online completely. But what do you do with that once you get a lead? And are you following up with it? Do you have a systematic process to turn those leads into business, being right now, or if it winds up going stale and not being able to convert it right now, have some type of drip campaign where, at least they're sending them a newsletter, staying in front of them. If you don't have processes to do that, you're leaving money on the table.
Yeah, I think, that is 100% what we have determined to be the number one reason that we are such a strong sales organization is that, we get back to people within 1 hour of them creating a lead during business hours. Like we have standards of contact rates, right? So within 1 business hour, every lead is contacted. Okay. And then they go through our automation process as well. So when a lead comes in, it creates a ticket and tells us to call them, right? So first attempt to call a lead, we actually don't even call them the first time. What we do is we send them a text that says, "Hey, this is Katie from Better Life Maids. I just want to know if right now is a good time to contact, or if right now was a good time, I could finalize your quote and give you a little bit more information and make sure your price is correct." So there's a few things that's going on there. First off, if they reply back to you, you're making it easier and easier so your stuff doesn't get filtered out through spam filters on the iPhone and other things like that. So you're kind of prefacing that. The second thing you're doing is
you don't do that. You're going to call them and they don't recognize the number and they won't answer.
Right. So that kind of helps two things, right? So then they recognize the phone number. So then they know they're expecting a call from you. You're respecting their time and you're showing them, hey, you're appreciative of the fact that you don't want to interrupt them with a phone call. So then they kind of respect that and be like, and then, it typically starts a conversation and they might just be like, oh, it's better for me to text right now. And so you can have a text conversation. You can't close a sale on a text typically, but you can at least keep the conversation moving. We actually don't do any email automation from leads until day 3. So because when they fill out a lead on Made Central, something automatically went to them anyway. So they've already gotten an email with more information about the service. That happens automatically. Every user on Made Central has that feature. So, your lead function on your website should have something that goes to them automatically, telling them what to expect. And that's what our first email goes as, is tells them what to expect. Is, hey, you could get a final quote on Made Central or on BetterLifeMaids.com, and you could get more information right there. If you're not ready to do that, though, you can get more. We'll call you and give you more details about how everything works and give you better pricing than what's not better, but more accurate pricing than what's online once we have a little bit more details on your home. So we try, and again, we say call here, but typically even the next attempt is a text message again. We're kind of really big on just trying to not interrupt them as much and let them choose whether they want to, reach back out to us. We will call them on the 3rd. It'll end up being day 4. So that'll be the first time we actually pick up the phone and ring them. Usually the text messaging really works really well. And then after that, it just kind of goes into email, right? Like, telling them more about your service, another email, just something simple. A lot of our emails are just really simple. Like, hope you're doing great. Wanted to check in. That's it. Personalized. Here's a long-term nurture email, another long-term nurture email with a customer that gave us a video referral. And then just again, maybe 2 months maybe 2 months down the line, here we are, and just like, hey, quick question. I think maybe it's 30 days out. I'd have to add up all the timers and tell you how long it is. But this email here, quick question, does really well for us. And this is pretty far down the pipeline.
So the idea is to have like a standardized process that you're trying to squeeze as much value as you can out of every prospect that you have.
Yeah, I think that's exactly right. So I think, I talked about, first off, have like a minimum number of times that you're going to contact them. Even better, have it structured out on a spreadsheet of, this is step 1, this is step 2, this is step 3. Until you get busy enough, if you've only got 3 leads a day, you're only dealing with that, you could do a very manual process. You've got the time. I mean, we're dealing with 30 or 40 leads a day. If we didn't have automation in place, we would go crazy. Even 3 leads, though, if you stack that out over a week, that's 21 people that you're in contact with at any one time. That might be a little bit more than you can manage, even with just a spreadsheet. It could be challenging.
But this is fairly, this is automated. The emails go out automatically, and the calls that you're making or the text you're sending, the tasks are being created. So you're really putting them in front of somebody, and they know they need to make that call or text today.
Yeah. So that dashboard we started on will tell them what they need to, what's up for them in queue to take care of. So if you have, if you have salespeople, like they kind of live in that dashboard. And then you have, sales KPIs to kind of measure how they're doing in their sales, like how many sales they're closing. You guys are looking at my sales for the week so far. When this pulls up live, you'll know as well as me, this is the first time I've looked at this week. So we're already -3, not good. We may not be as available as I thought. So, but so far for the week, we have 0 sales, other than one time. So we need to up our game up quickly. We have some data there that we look at. So, we can look at it at a bigger view to get a better picture. Scorecards that have gone out, who we have as new customers recurring, any customers that we've, gained or lost. And, then this is really what's important to me. So this is going to tell you leads that you've gotten so far this week, how many of those leads you've gotten a hold of and given a quote to. And it's early, so these numbers are a little skewed. Normally, how many sales recurring and how many sales one time. And then really the biggest thing is how many leads turn into recurring and how many turn into one time. So for me, with the volume of leads that we want, I want this total number here to be around 25%. But your number is going to be higher. I hear people tell me that they close 100% of the jobs that they quote. But if you really look at your funnel, there's a couple problems with that. And we both know what they are, Tom. But if you look at your funnel and you look at your leads, what they're talking about is if they can get an in-home estimate, they're going to close at a very high rate. However, how many of those people decided to invite you into their home to do that in-home estimate? And then really, if you're closing 100%, you're probably priced wrong anyway. And then how much of that time are you spending, traveling and going to those homes? I'm not saying that in-home estimates aren't effective. I'm just saying at scale, at the size that I am, it would be very hard to grow at any significant rate trying to do in-home estimates. I'm just going to pull up May's data.
And the percentage of leads that you quote, a lot of that has to do with the quality of the lead and where that lead came from.
Yeah. And one thing the software doesn't, what it's doing is it's only talking about people that you actually got on the phone, because the stuff in yellow is stuff that's happening over the internet. So it kind of skews your numbers down a little bit because it's just talking about what your internal sales do. Your external sales on Made Central, your quoting and your online booking are going to become, for me, it's the equivalent of, I'm going to pull up May, but I'm going to guess that our online sales under normal circumstances, if we have full availability, would be very similar to what my internal people do. It's very high. What about you? Is your online quoting and booking, similar numbers to your internal, or is it still very much phone?
More and more, it's shifting to that's being a larger proportion of lead capture as well as quotes and sales. I think there's a consumer preference to being able to go online, not having to talk to somebody, and book a job in an automated way.
Yeah.
And on the complete opposite spectrum of that, Robin has a question about when do we decide, how do we decide to do an in-home estimate? I guess that depends on what your, service delivery process is. Some companies don't even do in-home estimates. We currently don't. We haven't for a long time. I know of some companies that do, like they lead with that. And I know other companies that situationally will. I can't say that we don't. Situationally, we might, but it has to be a high value, client or prospect that would represent a lot of revenue.
Yeah.
You guys do any?
We won't, even for commercial, unless, because we have a good phone commercial process too, unless they're talking at least 3 services a week. Is kind of what I look at as kind of, it probably makes sense to get out there and really get this right. So yeah, repeat business only. For me, repeat business, typically 3 visits a week or more. And we'll send somebody out there to really make sure we have the relationship started. And that's going to be almost just as important on those high value sales.
If it falls under the category that we call residential, if it's a property management group, something like that, we might go meet with them because their needs might be a lot broader than even what they're talking to you. We can flip it around in terms of just giving them a quote, if you will, to turning it into a sales opportunity to explain the other opportunities and other things that we can do for them.
Yeah. So I pulled up my May numbers because I know my May numbers are better than my June numbers. So we had 19 recurring bookings happen right from our website. We never talked to those people before they booked, or maybe we did because we actually send them out a quote after we do a phone sale with them, and they can click a button, I guess, from that quote and finish their sale themselves. But they self-serve the final mile. How about that? They pick the time, they pick the date, and they put themselves on the recurring schedule. We'll follow up with them and make sure they understand how everything works. But yeah, they did a little bit of work for us and closed the sale. And we must have done a good enough job selling ourselves through either reviews or other means to get them to go that final mile there. So pretty solid month with a net gain of 14 customers. And then this number here is how much extra weekly revenue we produced by the end of the month. So pretty solid month. What is that? About $65,000 additional, just off the top of my head, roughly. I guess I'll get a calculator out.
Yeah, about. That's a lot of, and that's just like in a month. So on an annual basis,
71,000 in annual additional revenue just from 1 month. So you keep stacking up months like that, and you're doing all right. That's sort of our goal is to net 10 customers a month. Till the end of the year to kind of get back to. We won't be at pre-COVID levels as far as number of customers, but as far as revenue, because of the increases in prices and some other things, we'll be back to pre-COVID revenue levels based on that net gain of 10 customers a month. So back to this, so we can kind of see these numbers in action. This was pretty low here, 16%. So we talked a little bit about, quotes. We had 361 quotes or leads. I'm sorry. There's just no way that if I tried to book online estimates and get to 156 houses and give them prices, and that's just over the phone. Who knows how many we did over the internet? I'd have to look at our our internet data to really get that number. But there's just no way to get in that many houses in a month. I would have to have a full-time sales team. That would be very expensive. So do you kind of agree, Tom? Like, I just think it's not scalable, like at a certain point to keep doing in-home, even though they're very effective.
I guess it depends. I know some people have built very large businesses on the model of doing in-home estimates. I mean, you have to be committed to it. You have to make an investment in it. I think part of it depends upon what market you're in, the type of service you're offering. We've been across the spectrum on this. So, I mean, it's doable.
You do 6 a day, though, maybe 6 a day of these, so you're kind of capped out at 30 per salesperson per week.
Right.
Yeah. So, I mean, maybe 2 salespeople could do the lead volume and quote volume we do. 2 external salespeople could. But I only have 3 people working in the back office of my company. So I would have to make a significant investment in, in-home sales representatives, figure out how to compensate them in a way that is very much attractive to that kind of employee. So it doesn't work for me, but I get your point. It works.
Part of it, I think, really depends upon how you position yourself in the market, though, because there's a segment of the marketplace that is violently opposed to an in-home estimate. They don't want to be bothered. So it really depends on your brand and how you've positioned yourself.
Yeah, I agree. So
if you're going to do in-home estimates, you need to make sure that your marketing and your branding and the message that you're putting out into the marketplace is attracting the people who want that.
Yeah, that's all true. That's great. So just for reference, though, this is just people we got on the phone. So this 56 number here, if we included both of these 2 numbers, 12 and this, so another 31, our close rate is right where we want it to be at 25% total when you include the online. So that's about right where I want to be, 25% based on my historical data of like what our lead to sales percentage has been historically. So we're last month was solid. I think that we could have done even better on phone sales had we had more staff. So anyone in the chat, anybody seeing good trends with that we talked about when we started, seeing some positive trends with your staffing? I said when we started, I think we had 3 new people start this week. So more availability for us to sell and bring on new customers.
Yeah, hit us up in the chat. Let us know. Are things loosening up a little bit? Are we able to hire people? You hired how many people?
We had three net. 3 made it through training last week and are still with us. We're 3 higher than we were last week, and they showed up today and started. And we have 25 or 24 more hours of available labor to sell every week as of now. So we netted. I think we actually maybe hired 4 because we might have lost one. I think we did lose 1 employee as well. So it's still tough, but seeing some improvement there. So. But there's no way we could do what we do with this volume of leads if we did not have a process to run through them, and then a process to identify which ones are like the most valuable, really, too. I mean, one thing that we're really focusing on is really selling more to weekly and biweekly customers right now. And, with monthlies, even though we may have spots for them, really waitlisting them until kind of the end of the week and then following up with them before we confirm any new monthly sales. I mean, that's kind of not ideal. It'd be a more seamless process to tell them yes right away. But we're finding most of them haven't found anybody else anyway. So we're really trying to focus on weekly and biweekly sales. And then, if we didn't hit our goals for the week, we'll come back and fill out some monthlies and sell to the people that we basically waitlisted.
And then I guess, another dimension of this is going back and mining former customers or one-time jobs. And I mean, there's so many pools of potential candidates that we have available to us if we have the tools in place to prospect and mine.
Yeah, that's a good point. Like every single customer that's a one-time job for us, there's a report we run. Basically, I think it's just first time in report, something like that. I don't know. Is that what it's called? Um, First time in jobs. We run this every day, and then we follow up with each one of those customers by phone, just to make sure everything went great. Even though they got a survey, even though there's some automation following up with them, we check in with all of those first time in jobs, make sure that the job that went great, and then especially if they haven't signed up for recurring work, we definitely try and sell them on that process of coming on to recurring service.
Yeah. And you can build campaigns looking for like former customers and sort it out by, job frequency and the amount of, business they've done with you in the past. There's a lot of different ways to kind of put people in different buckets in terms of, how much value do you place upon them as being a prospect?
Yeah, you can sort out a lot of that stuff under campaigns and Made Central or any tool really. But yeah, you could look at customer campaigns or job campaigns and really sort out people based on, whether or not they have any future jobs, all these different frequencies, all these different, whether they're residential, when was their last job, how many jobs, if they have zero in the future, especially, you'd want to really look at them if they have no jobs pending, basically. So yeah, we do a lot of this stuff as well, and then market to them based on a lot of these factors. Good point.
So Robin is saying he's getting more candidates, but he's focusing on retention to manage demand and growth. And retention is huge. You certainly don't want to get in a situation where you've got a lot of turnover and you're having to hire multiple people to fill the same position, because a lot of times that's what we find ourselves doing, that we've got a stable workforce, but you've got those last several positions that you need to fill, and you have to hire 3, 5, 10 people sometimes to fill those last couple positions. So if you can retain the people that you're hiring, you can make a lot more money. I guess it's a short story.
I agree, and I think that those people, if we'll look at one more little stat here, but if you look at your employees, your long-term employees are more productive. They can clean more per hour, and they can generate way more money per hour than somebody you just hired. That's just a fact. So if I go over here on this column here, and I look at how much revenue per clock hour my employees produce, I mean, I have employees producing $65 per clock hour, and their productivity is like 150% for residential. On paper, that doesn't sound great. Like maybe they're skipping things, but their survey response rate is 97%. Their average score of their surveys. So we, do surveys on every cleaning, and their response rate's 45%. I mean, they're killing it, and they're making me, good money. They're making good money for themselves. Because we pay a commission type structure. So, this employee is making over $50,000 a year, $40,000 a year, because this employee ends up generating over $100,000 a year for me by the end of the year. Not many employees are going to do stuff like that. That's going to be a rare person. But I've told Tom about this employee before. I'm like, we need to find out how to find 10 more of her, and then we just have a business with 10 employees. Because the work that she can do is like the work of like 20 employees. Like if I had 10 of her, it'd be like the same as 20 of some other people. It's phenomenal how much more productive she is, than your worst people, especially like the bottom of your employee list as far as productivity and efficiency and some other metrics that you'd want to measure against. So Robin, you're right on, man. Your long-term employees are worth so much to your company. And having measurements to be able to reward them. And that gets into other stuff we've talked about, like, paying them in a way that rewards productivity is really important. Paying for performance in some way is really beneficial to keeping your rock stars.
So this is part of the theme that we're going to be carrying through the balance of the month, sales and marketing. We have a pretty cool guest lined up for Wednesday, Matt. Who are we going to have with us?
Corey Box of Drive Social Media. So, really, focusing on Facebook and Instagram strategies that you can put into practice in your business. And dude, this guy is a killer. Like, he came on at Drive Social Media when they were just a tiny little business. I was one of their first customers, and he's helped grow them from $800,000 a year to over $20 million in annual revenue. So that's a nice little business. I think we'd all like to have that kind of growth, right?
Okay.
Right. Yeah. So Corey is not just a practitioner in the sense of Facebook, and he's like an analytics guy. He knows a lot of it because he came in on the business in the early days. He was doing everything, but he is really like a business development guy, and kind of really visionary in like his ideas about growth and relationships and relationship marketing. So there may be some other things we get into other than just Facebook. So really excited about Corey coming up.
And there's a lot of people out there that do SEO, and it's not too hard to find people that will like manage your AdWords and some of those other pay-per-click activities. It's really hard to find people that even want to do your social media. Why is that, Matt?
Because it's not set and forget. You have to constantly be reinventing the copy. You have to be reinventing the imagery. It's tough. I mean, even I run Facebook ads for Made Central, and I'm always in there looking to make sure that our ads aren't going stale, that people haven't seen them too many times and then they just stop being effective. Maybe you're seeing our ads if you've been to our website, because we do remarketing where we want to show you some of the cool things we have going on. So go to madecentral.com, and that way you can see some of our ads and get some of our downloads. But the cool thing is that if you do it right, it's about the cheapest way you can drive traffic to your website. I mean, the gold standard of a click on a website is about $1 a click, and you can do it for less with. Really, it's way more expensive with that than that with AdWords nowadays. I mean, you're lucky to be paying $10 a click with AdWords. So Facebook is really inexpensive if done right. But the part that costs the most money of that is, so the clicks are cheap, but you've got to invest a lot in creative. So people get that mixed up. It's like, well, it's cheaper in this way, but then you've got to invest all this. So probably dollar for dollar, AdWords may be about the same price, but I like Facebook. Everybody's on Facebook, and not everybody, but most people are on Facebook at some point during the day, and you can catch them at the right moment and re-engage them very easily on a platform that they're already using.
Anything else you think that we would want to cover today, Matt?
Yeah, let me just go. Let me see if I can figure out how to go to madecentral.com. I just want to show everybody what is coming from Made Central. So we have a new tab called Academy. So right now, there's a few things you can do here. So this is going to grow, but if we're going to create a document library for you to have resources, things like that, right available to you at your fingertips. We talked about a little bit about community to start with, and about creating peer groups. We really want to create an engaging user group. So if you want to join our Facebook group, definitely click here. And then add all of our events to your calendar. So we have a calendar down below here, and we're going to put on a few more things here. So the Smart Business Moves is on here to start with. I'm going to start committing to doing 2 webinars a month on Thursdays. So I've got to just kind of get my cadence down for that with the 4th of July holiday coming up. I want to make sure I figure out the best place to start those up. But you're not going to want to miss those. Either myself or Tom or one of our really smart Made Central users is going to be teaching something, not necessarily about Made Central, but about maybe the way they're doing something in Made Central that's helping their business grow. It's going to be applicable whether you're using Made Central or not, and we want you to make sure you make all those. So make sure you go to madecentral.com and subscribe to our calendar so you don't miss any of those webinars. I think that's going to be the big takeaway, is to get on the calendar. I will put all those webinars on there for you, and you will not want to miss those. They're going to be very powerful information.
Well, Wednesday we're going to have another, not a guest, but a regular who's going to be joining us doing a remote, I guess is the way you would say it in the industry. Liz is going to be here with her mastermind group, and they're going to be dropping in for a little bit and kind of give us an update as to what's happening in Las Vegas. Hopefully, they'll be mindful that we're live streaming, and they'll tame it down a little bit. God knows what's really going on out there. I'm sure that.
I think that's going to be exciting to actually see people getting together again. Like, how cool is that we actually are to that point? I didn't know we'd be this far. It's pretty wild. Like, we're going to all get to go to, maybe we'll all be together in Vegas in the fall if you feel comfortable. I'll be there. I know, Tom, you're going to be there. The Made Central team will be there. I can't wait to be in person with you all and do a live event. So Liz is kicking one off. I think that's really cool. I'm excited to see their energy levels of being all together. There's something about being in the room together that's just, very powerful that we lost out a little bit on this last year. So that's
a long time.
Yeah. 14 months. We're all kind of itching to get out there and, get back together.
Well, anything else, Matt?
I think we ought to call it. We don't need to belabor anything else. It's good show, good questions. We will see you guys Wednesday. I'm excited. Dude, Corey's going to be great. You do not want to miss that show.
Yeah, we'll be, doing this on the same Facebook page that you're joining us now, or YouTube, wherever you might be. We'll be back here same time Wednesday, 5 o'clock Eastern. Thanks for being with us today. We'll see you Wednesday. Bye.